In our previous market update, I was speaking about the fact that it was time for troughs to form in the various markets that we are tracking in these updates. It is now time, therefore, for us to confirm whether the troughs have indeed formed. We will start with our analysis of the S&P 500 using SPX data, and this is the analysis we have been tracking with a 20-week cycle trough over here in the third week of April of this year. There is some debate about the magnitude of that cycle trough. As you will know from watching previous market update videos, it could be either a 20-week cycle trough, as it has been phased in this particular analysis, or it is also possible that it was a 40-week cycle trough because it occurred at a slightly awkward time. It is either a late 20-week cycle trough or an early 40-week cycle trough. When we have indecision regarding the magnitude of a cycle trough, what I tend to do is I focus on my level of confidence, and in this case I know that that is a trough of at least 20-week magnitude. I am aware that it could be a greater magnitude cycle trough. Because I am confident that it is a trough of at least 20-week magnitude, we can focus on the shorter cycles, and what we were expecting in our previous market update video was for price to form an 80-day cycle trough. Here is the nest of lows for that 80-day cycle trough, and here is the circle for the exact time at which we would have expected the 80-day cycle trough to form on the basis of the recent average wavelength of that 80-day cycle, which you can see at the foot of the chart over here is 74.5 days. Although the nest of lows is centered on this week ahead of us, or perhaps into early next week, it is worth noting that the circle for that 80-day cycle trough was beneath price action on Tuesday of last week, where potentially a trough of some sort formed. Usually, when we are tracking the price interactions with the 20-day cycle FLD, or any FLD for that matter, we expect a sequence that goes as follows: an A category interaction following a trough of at least 80-day magnitude, then a B and C category interaction where price should find support at the level of the 20-day cycle FLD at the time that the 20-day cycle trough forms in the market. You can see that in this case price didn't even get down there, indicating that there was excessive bullishness in this market at the time. That is therefore our BC category interaction, not so much an interaction as simply a time at which price dipped down slightly towards the FLD, indicating extra bullishness. Here is our D category interaction as price crossed down below the 20-day FLD on its way to form the 40-day cycle trough. Here then is our E category interaction as price bounced out of the 40-day cycle trough. You will know from our previous market update that we were expecting next the F category interaction where price should cross down below the FLD on its way to forming the 80-day cycle trough. So here is the big question. Have we just witnessed an anomaly in our sequence of interactions? That is not impossible. Does the 80-day cycle trough still lie ahead of us, centered where this nest of lows is over here at the end of this week or the beginning of next week? Or is it possible that the 80-day cycle trough formed over here at the beginning of last week, right above the circle for the 80-day cycle? If we measure the number of bars from that 20-week cycle trough in the third week of April, you will see that this trough formed here at 74 days. The average length discovered by Hurst 50 years ago for the 80-day cycle is 68 days, which would have placed that trough in the last week of June. It is therefore very likely, in my opinion, that we have experienced the 80-day cycle trough forming over here. And when we take a look at the other markets today, you will see that there is some commonality between these markets in support of this idea. So what does this mean? The fact that price failed to get down below the 20-day FLD, it sort of found support at the level of that FLD. That is not what we usually expect at the time that an 80-day cycle trough forms. What that would indicate is that there is still a great deal of bullishness in the market. And in recent market updates, I have presented a possibility in the Nasdaq that we will take a look at in a moment, which might provide the reason for that extra bullishness. Nevertheless, we are faced with a bit of an anomaly at the moment in the S&P 500. Either this 80-day cycle trough did form over here, indicating that the bull is still very much alive and well in the S&P 500, or we are expecting price to come down, and it would need to come down fairly quickly into a later 80-day cycle trough. How will we know which one of these is playing out? Recent price action tends to favor the first possibility. In other words, the 80-day cycle trough has formed. But if price finds itself back at the level of this 20-day cycle FLD, that will be the critical moment at which the market will reveal itself. So all eyes need to be on that 20-day FLD. In the Nasdaq, you will know, if you have been tracking our market updates recently, I have been presenting an interesting possibility in recent updates, which is that the 18-month cycle trough formed over here in the third week of April, as opposed to this simply being a trough of the 20-week cycle or even the 40-week cycle. It could be a trough of the 18-month cycle. If you are interested to understand why it is that it is possible that an 18-month cycle trough could have formed there, I would encourage you to go back and take a look at previous market updates. The important thing about this possibility is that it is unlikely that an 18-month cycle trough formed in the Nasdaq and didn't also formed in the S&P 500, and so possibly the tremendous bullishness that we have seen in the US markets is explained by the possibility that this 18-month cycle trough did form over here in the third week of April. It would certainly explain the very bullish move that we have had recently. Again, in the Nasdaq, we have the dilemma in terms of the placement of the 80-day cycle trough. Notice, and I pointed this out in the previous market update video, that the nest of lows for the Nasdaq with the 18-month cycle trough in the third week of April is slightly earlier than it is in the other analysis we were looking at in the S&P 500, making it quite possible that the 80-day cycle trough formed in the Nasdaq at this time over here in the last week of June. If we measure the number of bars leading up to that potential 80-day cycle trough over here on Monday or Tuesday 2 weeks ago, you will see that places us at 66 or 67 days since the trough in the third week of April. Remember that the average length of the 80-day cycle is 68 days, and so this potential 80-day cycle trough formed only 1 day or perhaps 2 days earlier than the average length discovered by Hurst 50 years ago. If you don't understand why the average length of an 80-day cycle is 68 days, I would encourage you to download the 10 core concepts document that I will provide a link to in the description below this video. And so this analysis in the Nasdaq tends to support the idea that an 80-day cycle trough has already formed in the US markets. I am also displaying on this chart the 80-day cycle FLD because we took a look at that FLD in the previous market update video. I pointed out that if this is a trough of the 18-month cycle, we would expect the 80-day cycle FLD to provide support to price action. The possibility that this 80-day cycle trough has already formed indicates again that there is a tremendous amount of bullishness present in this market because price failed to get anywhere near the 80-day FLD in order to find support there. Again, the important thing to watch is going to be the 20-day FLD. If the 80-day cycle trough has formed, we would expect the 20-day FLD to provide support over the next week or so. If price finds support at the 20-day FLD, we will confirm the position of the 80-day cycle trough as having formed in the final week of June. We have been taking a look at the Australian stock market. This is the ASX index. And it provides us with an interesting comparison to the US markets, because whereas the US markets have been consistently bullish, the Australian market has been struggling to pick itself up out of this trough in the third week of April. Of course, the trough occurred at the same time as that same 20-week cycle trough in the S&P 500 and also the potential 18-month cycle trough in the Nasdaq. Generally speaking, because of the principle of commonality, if an 18-month cycle trough formed in the US markets, we would expect an 18-month cycle trough also to have formed in the Australian market, even though it is on the other side of the world. Generally speaking, these big cycle troughs tend to form at the same time. So what has been happening to the Australian market? Well, here is the analysis, and as you can see, we had our 40-day cycle trough over here in the last few days of May. Here is our nest of lows for the 80-day cycle trough. And again, we have a circle for the 80-day cycle, which is almost beneath this price low over here, indicating that it is possible that the 80-day cycle trough has formed in the Australian market as well. The Australian market has been stubbornly refusing to confirm that trough. However, we can analyze the interaction with the 20-day FLD, as you can see over here. But what has been happening in the Australian market is that we have a triangle shape developing. As you can see there, when a triangle shape develops, tracking the sequence of the interactions with the FLD can get a bit messy. And so what I tend to do is not focus so much on the FLD, but rather take a look at the VTLs that are surrounding this triangle. We have a combination of two separate cycle VTLs, the 20-day cycle VTL and the 40-day cycle VTL, which are pretty much defining the shape of this triangle formation. We can simplify things a little bit by only focusing on the 40-day VTL. Now, an interesting thing happened over here where this potential 80-day cycle trough formed. That is, the price just dipped down below that VTL. That is something that you will often see happening as an important trough forms. Because of the nature of the market, price will often tap a VTL, maybe break through it because potentially there are stop orders that have been placed in the market. And therefore it is also possible that the 80-day cycle trough has formed in the Australian market. How will we know? We have to see a break upwards of the 40-day VTL to confirm that the 80-day cycle trough has formed. If that happens, and it will need to happen soon, then we will confirm that the 80-day cycle trough has formed in the market. If price fails to get above the 40-day VTL, then of course we will expect the 80-day cycle trough to still lie ahead of us. It would be expected later this week or perhaps next week, and only then will we see price rising out of this 80-day cycle trough. Notice on this chart the floating circle and whiskers for the 40-week cycle, because of the same dilemma that we have in this analysis regarding the magnitude of this cycle trough. Is it a 20-week cycle trough or is it a 40-week cycle trough because of the whisker that we are seeing floating above there? We cannot absolutely confirm that point yet, but in the meantime we are tracking the formation of the shorter cycle troughs. Gold continues to be interesting, but something occurred last week, which is that price moved upwards, contrary to our expectation for the formation of a fairly high magnitude cycle trough, in this case an 18-month cycle trough. I've taken a step back and we're looking at the weekly chart here so that we can consider what is actually happening, because the analysis performed by Sentient Trader changed last week when that bullish candle formed. This was the analysis that we were considering with an important cycle trough back here in October of 2022. We then had a 40-week cycle trough over here at a slightly awkward length of 370 days. The average length of a 40-week cycle, discovered by Hurst so many years ago, is 272 days. And so at almost 100 days too long, this is an awkward position for the 40-week cycle cycle trough. Bear in mind that we often use a peak analysis when it comes to gold because of the possibility that these cycles are synchronized at their peaks and not at their troughs. Nevertheless, as I've discussed in many updates about gold, it is very useful to keep an eye on the trough analysis of gold, because even if those troughs are not synchronized, they will often come in exactly on schedule. This trough, however, is not a trough that came in on schedule. Notice the circle and whiskers for the 18-month cycle, and notice how this whisker overlaps this trough over here. However, the circle itself is positioned over here. Now, when you're performing a Hurst cycles analysis, what one does is you take a look at when the next trough is expected, and you ask yourself, where is the closest trough? Is it possible that this is an 18-month cycle trough? Or, and this is the interesting thing that I would like to introduce today, is it possible that the 18-month cycle trough formed over here? And so, exploring that idea, we have another chart to look at. Here is that analysis with an 18-month cycle trough beneath this low point over here. Is it possible that the trough that we have been considering to be of only 20-week magnitude is in fact an 18-month cycle trough? The interesting thing about this analysis is that it matches the analysis that we are looking at in the Nasdaq. Remember that in the Nasdaq we were considering the possibility that an 18-month cycle trough formed over here in the 3rd week of April. Is it possible that an 18-month cycle trough sneaked in to form in gold and also in the US markets and possibly other stock markets around the world? Of course, gold is a different market to a stock market, so we would not expect the troughs to occur at exactly the same time. However, it is worth pointing out that this October 2022 trough, which is a trough of 54-month magnitude according to this analysis, was also, of course, an important trough in stock markets. And so, although the principle of commonality does not apply directly to the relationship between gold and stock markets, there is often a correlation between them. And so what does it mean if an 18-month cycle trough formed in gold? How does that change our outlook? All it does do, in fact, is it explains the recent surge of bullishness in gold, because here is a less bullish cycle, if you like, and that is a more bullish cycle, indicating the possibility of a greater magnitude cycle trough over there. But zooming in and switching to a daily chart, we can explore the difference that this makes in terms of what we are expecting in this market. Here is the nest of lows, which is now a nest of lows of 20-week magnitude, as you can see. Notice the circle for the 20-week cycle, which is over here, and the nest of lows itself is centered around about today, supporting the idea that an 18-month cycle trough did form over here in the middle of February, is the way in which price has interacted with the 20-day FLD. And let's zoom in even further to consider that in greater detail. In our previous market update recorded before the markets opened on this day over here on the 24th of June, I was speaking about the fact that we would expect price to drop down below the 20-day FLD that you see on the chart over here, on its way to forming this cycle trough over here, which at the time we were expecting to be of greater magnitude than 20 weeks. Notice how on Wednesday of that week, price did indeed cross down below the 20-day FLD. However, the very next day it bounced back up again and crossed back up above the FLD. It then, over the weekend, by accident slipped below the FLD again and crossed strongly above the FLD on Wednesday of last week. That moment where it crossed strongly above the FLD was the information that we needed to confirm that a trough had formed in the markets. Question is, what trough was it? It is very difficult to explain this trough over here as a trough of 18-month magnitude, which is why it is likely that the 18-month cycle trough did form in February and that this is the 20-week cycle trough that we see over here. Is it possible that we are wrong about this and that an 18-month cycle trough still lies ahead of us? We still have this nest of lows over here centered on this week, and so far in pre-market action, as you can see, price of gold has dropped down. Is it possible price is going to now come down and form that trough? It is possible. The critical thing that we need to watch is, again, the 20-day cycle FLD. If the 20-week cycle trough has formed in gold, the 20-day cycle FLD will provide support. If, however, the 18-month cycle trough did not form in February and still lies ahead of us, then we will expect price to cross down through that FLD. We took a quick look at the peak analysis in gold in our previous market update, because when the troughs become a little unreliable in gold, or we have an early trough or potentially a late trough, it is important to turn to the peaks to understand whether synchronization has returned to the peak analysis. In this case, it seems possible that it has. Here is the 40-week cycle peak that I pointed out in the previous market update. Here is that 40-day cycle peak that I asked the question about in the previous market update video, asking whether that was indeed the 40-day cycle peak. You can see it has now been found to be the 40-day cycle peak in the analysis. It is still a hollow triangle, meaning it is not absolutely confirmed, but it is very likely. We are now expecting a 20-day cycle peak to form in the price of gold, and it is quite possible that that peak formed over the weekend, but we have our next 80-day cycle peak looming ahead of us. And so, if all goes well for gold, we would expect the 20-day FLD to provide support and price to keep moving up towards the 80-day cycle peak, expected towards the end of July or in early August. Whereas we have evidence of troughs forming in other markets, Bitcoin, however, failed to form what could have been an 80-day cycle trough. The previous update that we did about Bitcoin was on this day over here, on the 24th of June, and I presented two possible options for the analysis. The first option was the analysis we've been tracking some time, which was that Bitcoin is moving down into an 18-month cycle trough. And here you can see the nest of lows that is still present for that 18-month cycle trough, because it does seem likely now that Bitcoin is indeed coming down into its 18-month cycle trough. I did present a bullish alternative which suggested the possibility that an 18-month cycle trough had in fact formed over here. I would encourage you to go back and take a look at the past two market updates about Bitcoin in which I discuss this possibility. That was a possibility that I presented on a different chart, and we're going to take a look in a moment at what has happened to that. But that possibility relied on the fact that an 80-day cycle trough would form at a target that we calculated of about $60,000. There is that $60,000 target. On the day that I released that market update video, you can see that Bitcoin came down fairly hard. It dropped below the $60,000 target, and then it bounced up again. We were provided with some hope that the 80-day cycle trough had indeed formed at this point over there. But a very important reminder that we have to have confirmation that a trough has formed. You can see that price came up towards the 20-day cycle FLD. It didn't, in fact, even touch it. And then last week reversed direction, dropped lower, and thereby failed to confirm the 80-day cycle trough had formed, and indicated that the most likely analysis that the 18-month cycle trough still lies ahead of us is the one in play. And so we are now watching for that 18-month cycle trough to form. There is no confirmation yet that it has formed, but if we take a look at two other FLDs on this chart, they provide us with some interesting information. First of all, there is the 80-day cycle FLD on this analysis, which presents a target of about $52,000. You can see that price crossed fairly cleanly below that 80-day cycle FLD on the 24th of June, and that provides us with a target of $52,000. Notice that at this level over here, we have a 40-week cycle FLD. That 40-week cycle FLD is rising strongly. It is not required to provide support, But as you know, FLDs often do. We're not going to study the sequence of interactions in this video because the sequence of interactions gets a little complicated when you have the 3-to-1 harmonic ratio between the 54-month cycle and the 18-month cycle to consider, and I don't want to make this video too long, but we should certainly be watching this 40-week cycle FLD as price comes down to form the 18-month cycle trough for potential opportunities if it does provide support to price. Of course, our 20-day FLD is going to be very important as well, because we would expect price to cross above the 20-day FLD after forming the 18-month cycle trough. Switching back to the other analysis that we were looking at that had presented the possibility that the 18-month cycle trough had formed over here at the beginning of May, you will notice that this analysis has changed. I had influenced the analysis by pinning the 18-month cycle trough over here to explore the possibility of that analysis playing out, but Sentient Trader refuses to honor that pinning of that trough because of recent price action. And so even this analysis tells us to expect the 18-month cycle trough to form. I had an interesting email asking whether it was possible that we would experience a symmetrical price action, and that in fact the 18-month cycle trough could have formed in May, and what we're going to see is a symmetrical price action like this. What are the chances that that is going to develop? The chances are very low in my opinion, so we do not need to worry about this possibility just yet. Of course, it is just possible, but bear in mind that we have a 3-to-1 harmonic ratio between the 54-month cycle, this orange-colored cycle, and the 18-month cycle, this yellow cycle over here. When you have a 3-to-1 harmonic ratio, generally the structure of the cycle shapes is first a bullish cycle shape, then a neutral cycle shape, and then a bearish cycle shape in this way over here. According to this roadmap, we would now be in about this position over here, and so the chances of a symmetrical and therefore bearish price action are very low in my opinion. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.